Good morning, traders from each and every part of the world that you're joining this series of the morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your number one financial broker and partner in Kenya and beyond. Now, on this morning market series, we will look into the new developments in the financial markets as we look at the intricacies which comes with those developments and the opportunities which lies ahead. But before we dive deep into it, I would like to register that this is going to be a pre-recorded YouTube video that you could find on our YouTube channel at HFM Kenya. Kindly visit the HFM Kenya YouTube channel, like, subscribe, and click on the notification button to improve on the algorithms which will allow these videos and content of informative nature to get to more and more people into the near future. The content is also quite educative and very much informative to make you a better trader and investor. So I will give a 5-second moment of silence so that you could literally click the like, subscription and notification button. So I will wait. Very nice. With that out of the way, beginning from a fundamental point of view, we see that yesterday we had quite a number of news coming out from various parts of the world. We had the speech from the Bank of England Governor Bailey, who basically articulates the functions of the Bank of England, which could be categorized into two: to ensure favorable employment and to control inflation. Now we can see that no data was printed because it was a follow-up meeting. Very nice. Oh, this actually was on Wednesday. Then we had DAP employment change came in negative. DAP automatic data processing, which has been said to be a reflection of NFP, by the way, and it came out quite negative at 146k, suggesting a weakening United States dollar. Now, ADP, or automatic data processing, shows the number of people employed away from government employees and self-employed individuals in the United States. We later had ISM services PMI, which could be categorized under inflationary data, which came out negative, weakening the US dollar. We see it was printed at 52.1, suggesting that it is lower than what was expected and lower than previous. Moving on swiftly, we had a political event in France, I believe, where we have the barely new government, which has stayed in office for barely 3 months. Vote of no confidence against Prime Minister Bania. Shall be looking at the effects of that, at least in the immediate term, because France is among the frontier states using the euro currency. Then we later had Fed's Chair Powell's speech, which was also a follow-up to monitor the two primo roles of central banks in the world. In this instance, in the United States, the Federal Open Market Committee, which is to ensure favorable employment and to monitor inflation. No data was printed. We anticipate, as it stands right now, to have the Feds cut their rates come into January. We shall be looking into that as we proceed to the first month of next year. Then we had the balance of trade, which can be categorized under the inflation data from Australia, came out during Sydney session, which came out high, slightly higher than the previous and the consensus, or what was anticipated, slightly strengthening the Australian dollar. We shall be seeing the effects of that moving forward. And yesterday, which was on Thursday, we had major labor data coming from the United States, jobless claims for weeks average, which came out negative. It was anticipated at 218K. The previous was 218K.25. It came out at 217.5K, weakening the US dollar. For initial jobless claims, also came out negative at 213K. The previous was 213K. It came out at 224K, and the anticipated was 215K, slightly weakening the dollar right there. We had retail sales year on year coming from the euro, which came out at 3%, came out at 1.9%, beg your pardon, which is higher than the anticipated 1.7%, which slightly strengthened the euro. Quite a number of economic data that was printed that will be affecting the market direction. And most importantly, as we walk to today, we have the grand labor data, which is the non-farmers payroll, which will be coming to today at 3:30 East African time, which is New York opening hours. And if we remember, for the NFP, which came out last month, which came out at 12K, the lowest we have seen quite a number of months or years relatively, which was attributed majorly to hurricanes in some part of the United States, which interfered with the employment process, or so it has been said. And now we are anticipating an FP for today, which is coming out today, to be at 200K. We see quite a huge jump there. So we expect a lot of volatility in either direction. And NFP is rather notorious or famous for turning market trends. So this is quite major. We shall be looking at how it is going to be turning market trends or pushing for aggressive continuation of different market trends after the news has come out for data interpretation. And that's pretty much it on fundamental analysis. So if we move on to the charts, now, from what we have observed, we can informatively conclude that the US dollar seems to be losing her strength. So, beginning with the ratios aspect, Euro USD, go through the daily time frame to see what's happening. We have a bounce from the key level that we looked at yesterday. Let's go into much more details to see what is happening here. Very nice. We see from the 4-hour time frame that we are having a market trend change to the upside from the long bearish trend. Now we see that we are moving a little bit bullish, creating opportunities for buying opportunities. This is because of the weak economic data coming from the States, which is weakening the US dollar. So for US dollar quote currencies, it's going to be moving in a bullish trajectories to suggest buying opportunities. If we go to the 1 hour, we see that we have a clear change of character where price is shifting from a bearish to a bullish aspect. We want to see the highs being taken out right here to suggest price movement even much more to the upside. And for the bearish trend to continue, which is pretty much not the case, we expect these lows to be taken out. But remember, guys, today we have the non-farmers payroll coming out, so we might be facing a little bit of consolidating market. Consolidating meaning moving sideways as we anticipate the high awaited NFP data to be printed. Moving to GBP USD from a daily time frame, we see now we actually took out the high that we spoke about yesterday, and now price is printing to the upside. If you go to a lower time frame and see clearly what is happening, we have a little bit of consolidation on the 4 hours. For trading opportunities, would want to see the highs being taken out, suggesting price movement to the upside, supporting printed fundamental analysis as we anticipate the NFP data. For Australian dollar USD from a daily time frame, we see that we are still bearish on this particular currency, with the US dollar still having a feels day on the Australian dollar, and we see a little bit of consolidation. So we want to see highs being taken out to support that narrative of a weakening US dollar. But in relation to the Australian dollar in this context, price has been moving quite rather different because the Australian economy itself is not really doing good. So let's buy it time as we see what is happening. So we have been having a consolidation for quite a number of days. Not pretty much convincing price action right here. For US dollar based currencies, we begin with USD CHF, have a bounce from the key level that we talked about yesterday. Now price is printing much more lower. We shall see for US dollar based currencies, it will begin to give us a bearish momentum because of the weakening US dollar. Now if you go for 4 hours, we see the lows have been taken out, supporting this narrative. Very nice. If you go to 1 hour, we see even a much more aggressive bearish momentum to the downside. Now we would want to see more lows being taken out, even as you go to lower time frames to find much more sieved risk to reward or entry points. For USD JPY, we see that we're in some sort of consolidation also. Price is neither moving up and down. Let's see if that's the case in lower time frame. Pretty much it. We see this high was taken out recently. We want to see much more highs being taken out to support that narrative. But back in our minds, we remember the data which was printed by the Bank of Japan, which has been giving us a bearish move. Could see the arrows that we drew here sometime early this week, where we anticipated price to be moving in a bearish momentum for sell opportunities has been playing out. So we'll be looking out for NFP. Then after the data is printed, we could possibly find a much more informed bias. For USD CAD, beginning from a daily time frame, we see we are a little bit of consolidating and we anticipate price to move much more higher. For a lower time frame, we see that we are having price bounce from the key level here, retesting it. Would want to see price moving a little bit to the downside and possibly breaking this key level to support the narrative of price moving to the downside. But this particular pair is informed from economic data coming from both of the states, with a key in-look into their politics. Remember, they are neighboring countries, and they will tend to balance their economic data, especially a reflection of the US economy reflected to the Canadian economy. So quite a unique data to trade, and we shall be anticipating how it shall be moving henceforth after the NFP data. For the most anticipated cross pair, that is the Great British Pound against the JPY, we see that price has been printing to the low for quite a number of days now, of course attributed to the positive numbers which were printed by the Bank of Japan. But wait a minute, what would we anticipate to see now? We see that highs have been taken out to suggest the Japanese yen could be losing to the Great British Pound. We want to see more highs being taken out to suggest that narrative. As it stands now, we are in a clear bullish run, but we want to see highs being taken out with a candle closure. We see a key level here at 192.255. Want to see candlestick close above this key area to support this particular narrative. And for those who would suspect this is a retracement, if that is the case, we want to see lows being taken out to continue the narrative. But remember, trends in the market or market direction is influenced by printed economic data, which tells us the health of the economies of these particular countries. Now, for gold, we are in a quite of a consolidation for quite some time now. Price is neither giving us a bullish or bearish run. We see a little bit of kind of almost retesting the 2606 price. So moving to a lower time frame, we see we are in a consolidation for quite some time. Price is ranging, making equal highs and equal lows. We want to see a break above or below, possibly, which will be the case when the NFP data is printed, because from a geopolitical point of view, that also moved gold to a large extent. We observe a little bit of wars in the Syrian part of the world, but the major movers of gold recently, which has been in the Middle East and in the Eastern Europe front of the Ukraine and Russian conflict, this has not been put into the global lens, if you may say. Now, by any chance, this is not meant for financial advice. This is for informative purposes. So kindly do your due diligence and remember to observe risk management with good money management, so as to see profitability and preserve your capital into the future. Now, see you tomorrow. See you on Monday to do things the same way that has proven consistency, profitably consistent. And until then, take care and remember to trade with a reliable, licensed financial broker. HFM is a reliable and licensed financial broker with competitive financial products that will suit your financial trading style or investment style. In case you're wondering how to get started, kindly visit the hfm.com, navigate through the website and possibly register an account. Then you will have our experts call you to understand and spark conversations about the same.